Okay, let's take a look at problem 4-38, which deals with activity-based costing and pricing. Walla Walla Doors has consistently charged manufacturing overhead costs to products using machine hours. However, the company president has decided that the use of ABC would provide more realistic cost estimates and in turn give the company an edge in pricing over its competitors. Walla Walla's accountants and production manager provide the following budgeted information for 2008, and they tell us that there's a budgeted capacity of 1 million machine hours. Okay, so we've got cost amounts coming up with a total budgeted overhead cost equal to 5.85 million, and it looks like we've got 5 different activity drivers for different types of manufacturing costs, and then down here we understand that a bid has been made for 2,500 doors, and they asked, Withers asked the cost accountant to prepare a cost estimate for producing the 2,500 doors using the following data. Okay, so we have that data down here. Let me slide down and see what we've got to do. There's what we're looking to solve. What's the predetermined overhead rate if traditional measures of machine hours is used? Well, let's tackle that one first. Okay, now I've moved to a different spreadsheet, and we'll be able to tackle it using this template. Okay, so the budgeted overhead given on the other page was 5.85 million. If I've entered the zeros right, 5800,000, it's going to let me know when I made an error. Right, 5850. Let me 5850123 was the dollar amount of the overhead that was given, right? And we got that from right there, the left of my mouse. Okay, and the budgeted machine hours, we've got to find that too, was right there, budget capacity of 1 million. Okay, so we drop that in, we get the formula, and the template is going to do the division for us, which gives us $5.85 per machine hour. B wanted us to say determine the manufacturing cost per door. And I believe part B was asking us as presently accounted for, so the current method. So we would drop in the direct materials, and the direct materials were 50,000, direct labor was 150,000. Drop those in. Okay, the applied overhead would be equal to the 585 times the correct number of units, and the machine hours is 5,000, so that's our activity base that we're using. We're only using one in a traditional accounting system, so applied overhead is equal to $5,000 times that value right there, and we've got 229,250 of total cost divided by the number of doors, and I believe the number of doors was 2,500. And there it is, because Withers asked the cost accountant to prepare cost estimates for producing 2,500 doors. So we drop in 2,500, and we come up with 91.7 as the cost per door using the traditional way. Now let me keep sliding up so we've got a little bit more room to work. If we use ABC, we've got to determine the predetermined rate per activity per unit of cost driver. Okay, now let's talk about electric power and the activities that relate to that. Okay, if we slide back here, we had to the left of my mouse 500,000 of electric power, and we had 200,000 kilowatt hours. So if we drop that information in, 200,000, I think I did it right. We've got $2.50 per kilowatt hour. Now, work cells were budgeted work cell cost and budgeted square feet. So 3 million of cost and 300,000 of square feet. So we drop those numbers in. If I do it right, I've got $10. If I do it wrong, it's going to tell me it's wrong. Okay. Materials handling. $1 million of cost and 200,000 of material moves. It's the activity base there. So we've got $5 of a predetermined overhead rate per move. Quality control, we're looking at inspection costs and number of inspections, if I can say it right. $1 million of inspection cost and 50,000 inspections. So I can drop in, I'm going to copy this here and put in 50,000 here. So we've got $20 per inspection. And then machine setups, we've got 350,000 and 25,000 setups. So 350,000, 25,000 setups. $14 per setup. Okay, so then if we were to determine the cost per door, we know that the direct material from before was equal to, I'll just slide up and pull it from the traditional way, right? Oh, actually I can't because we did it in a little bit different way. Let me hit escape here. We'll go get that information. Actually, in looking at the schedule, we're going to add the total cost and divide by the number of doors. So if we go over here, we just know it's 50,000 because we're building up this bid now. 50,000 and 150,000 of labor. So if we drop in that information, I think we're on target, right? And then we need to apply the applied overhead. And to do that, we need to know how many kilowatt hours are used to come up with 2,500 doors. And they tell us it's 500. We've already calculated the cost at $250 each. So we'll take the 250, and I'm just going to reference from above, times the 500 kilowatt hours. And you can see me putting it in there. So I get $1,250. For work cells, we figured it was $10 each. And then we've got to multiply it times the appropriate number, which I think is $1,000. I'm sorry, 1,000 moves. Let's go back and take a look. Yeah, there's our 1,000 of our moves. Okay. Then we've got material handling. We've got to figure out how many material handling moves we have. Oh, I'm sorry, work cell, the base is square feet. I'm getting a little bit confused here. The material handling moves, though, was 20. So now here we've got to multiply the material handling cost, $5 times 20. Quality control is given in overhead rate per inspections. So the number of inspections to make 2,500 doors is 15. So we'll multiply that cost of inspection times 15. And product runs, which was $14 per setup. Number of setups is 6. So we take 14 times 6. And we get 84. And then the math is just done, with Excel. There's a nice formula. Though, because this template is checking for errors, there's an if-then logic added to it. But essentially, we're just adding up these values. And then we divide by the number of doors, which was 2,500 on the order. And we come up with a cost per door of $84.69. Okay, so then on Part D, we're going to compare the results. Okay, so the present system, from up here, I think we came up with 9170, so I'll reference cell G18 equal G18. I got to type it in right, equal G18. I typed something else. G16. Wow, I'm really missing it there. There we go, 9170, and then we'll pull the 3668 of the gross profit. The ABC system is going to pull that number right there. Oh, and it doesn't like that. My guess is it needs to be rounded. So I could just key it in and it'll work. By the way, if ever you run into that, you can always use the round function, which you hit, type it in here, you can you would type equal round, and you put the value and round it to 2 decimal places, and that'll take care of it. Okay, just wanted to illustrate the round function. And so there we've got the activity-based costing method. And now we just have to, the problem tells us to comment on it. Actually, let's take a look and see exactly what it wants to know. If the two cost systems will result in different cost estimates, which cost accounting system is preferable as a pricing base and why? Okay, and hopefully, let me just type in the answer here and we'll read it. It's evident that a selling advantage results from the ABC method because the price is lower. So using basic economic theory, we would expect to sell more units at the lower price. Okay, and I'll let you read the rest of that comment as well. All right, and you could have paused it, by the way, or pause it now and go back if I didn't give you enough time to read it. Number E says, if activity-based management were implemented prior to an ABC system, which of the manufacturing overhead cost might be reduced or eliminated? Okay, so now we're talking about ABC and ABM, and our author tells us it's evident that, I've got this, the same one, I copied the wrong one. Hang on one second here. Okay, now let's read what the solution to E is. If activity-based management were implemented first, then the company might be able to significantly reduce or eliminate the material handling and quality inspection costs. And obviously those are the ones that are non-value added in terms of what the customer is willing to pay for. Both of these items create $2 million of the total $5,850,000, or 30% of manufacturing overhead costs. And that's this problem, everyone. Thank you.